Hello, uh, good afternoon, good morning, wherever you are. Okay, I am the ACCA tutor from Transcal Business School, which is an initiative from Transcal Consulting Services um, meant to teach accounting students, particularly ACCA students. Okay, those ones who are pursuing the Association of Chartered Certified Accountants professional accounting qualification. Okay, um, as you all know, ACCA is a global standard when it comes to accounting. So, pursuing it or recommending its presence in a particular country means that professional accountants would be implemented in that particular jurisdiction. Okay, it also forms part of the EFAC. And for you to know more about the ACCA qualification, you can go on their website at https www.accaglobal.com. That's accaglobal.com. Okay, if you go there, you are going to learn more about this global accounting qualification. But now, in this particular video, I'm going to take you through payroll issues to do with financial accounting. Okay, so it's part of financial accounting where we'll be discussing about how we are going to account for payroll, and we are going to delve in much detail on the aspects of labor computations as well as the bookkeeping with regards to payroll. Okay, or labor. All right, so as you know, my name once again is Jerem Timkulu, and if you want to get in touch with me, I'm available on +263 774 596 368. Okay, it's a Zimbabwean number, and I will be there 24/7 to assist you all. One of my guys whom I work with will also get in touch with you for engagement, for learning issues, because we teach the ACCA qualification from the grassroots up to the professional level. We also mentor OBU, that is Oxford Brookes University, BSc degree in applied accounting students. We mentor them so that they are awarded a groundbreaking UK bachelor's degree in accounting. So there are so many things, so many benefits. If you pursue the ACCA qualification, you will get a degree along the way. Okay, and this is why the ACCA qualification is considered at par with a master's level degree in accounting. Okay, so without wasting your time, let us go straight to business. Okay, just a minute. Okay, just 1 minute. Okay, so in this particular video, as you can see, we're going to talk much about accounting for payroll costs. All right, and these are my credentials to those who don't know me. Okay, and all right, okay, you can this is my name. Okay, this is my name. Okay, and these are my contacts, and that's the email through which you can get in touch with me or the Transcal consulting services in general. Okay, now the agenda of this presentation, like I've said, we're going to touch more about what labor costs are in their different categories. Okay, and then we are going to show you the computations related to labor costs and how they are going to be recorded in the books of accounts. So by the end of the presentation, you should be able to understand the nature of payroll, what gross pay and basic pay is, remuneration methods, payroll administration and documentation, payroll deductions, payroll, I mean the payment methods, and how to update the records with regards to payroll. Okay, and this video is actually relevant to those who are studying the ACCA FA1, FA2, and those ones who are doing the FA paper itself, that is at diploma level. So you just have to watch this video and enjoy it as we go. Okay, it's just a short video, less than an hour will be done. Okay, so that is it. Okay, let's move. Okay, the nature of the payroll function. Okay, because by the end of the day, the examiners would want you to show them if you understand what the payroll function is all about. Okay, what is it? Okay, because so many people confuse the HR function with the human resource functions. Okay, these are very different things. Okay, it is a very important function in an organization. Remember, the employers are obliged to pay wages, to pay salaries. Remember the difference between wages and salary, that wages are usually paid on a short-term basis, like for example on a frequent basis, for example weekly or even 24 hourly. Okay, somebody can be paid on a daily basis or on a piece rate basis, it depends. Okay, they are very frequently paid, but a salary usually is paid at the end of the month. Okay, at the end of the month, or on a monthly basis. That's the difference actually, but by the end of the day they're just the same legally. Okay, but we are saying wages, they are technically paid on a frequent basis, like for example weekly, while salaries are paid on a monthly basis. Okay, the employers have to pay taxes, the correct amount of taxes, to the tax collector. So this particular function is very important, because by the end of the day they have to deduct what are called employment taxes. Okay, the payees, etc. They are the guys who are responsible to determine those figures. All right. But you need to know that usually this function is present in large organizations, not in small companies. In small companies, you discover the function might be held under the HR function, or as part of the just mainstream accounting department. Okay, so do not be confused. It is usually found in big organizations. Okay. What are the roles of the payroll function? The role of the payroll department or function comprises of the following: calculation of gross pay, calculation of tax, national insurance, and other deductions, preparing pay slips, making appropriate returns to external agencies, make up wages or preparing tapes for bank transfer. Okay, and distributing pay slips, as well as preparing payroll statistics. Those are the functions for this guy. But we need to understand what gross pay is. As we go, we should understand. But just for the purpose of emphasizing point, gross pay is the amount that an employee earns, the total amount that he earns. Okay, that he earns owing to his contract, owing to his employment contract, or owing to offering his services. He is going to earn this. Okay, but it doesn't mean that that's the amount he's going to take home. The amount he's going to take home is called the net pay. Is the net. Are we together? So I just wanted you to now to know this from scratch. I mean from the initial stages, so that we won't fight with one another as we go. Okay. Okay. A person's wage Okay, so wage packet or pay check is that person's net pay for a period, which includes gross pay less. Okay, because we are saying the net pay, the net wage packet. I mean, your wage packet is just the net pay. Okay, after deductions. So it means that it includes gross pay less the deductions, less tax, benefit contributions, and other deductions. While its gross pay is the pay for the employee's work done in a period, which includes the basic pay, overtime, commission bonuses. Thus, in short, gross pay is what an employee earns, the total. It is not what the employee actually receives, because by the end of the day, he's going to receive the net pay after deductions. The total labor cost to the employer is then employee's gross pay plus any additional payroll taxes and pension contributions that the employer has to bear. So in the books of the employer, he's going to incur this guy, the employee's gross pay, plus the employer's obligation, tax obligations, and NASA contributions, which he pays on behalf of his employee. Sure, that one is understood. Particularly, we use the NASA guys, the NASA. Okay, the National Social Security Authority, the National Social Security Authority. Okay, these guys are the ones responsible for pension contributions in Zimbabwe. All right, you may be having a separate authority in your particular country, doesn't matter, but at the end of the day, basically this is what happens when it comes to these deductions from pay. Okay, they are usually obligatory. The pension contributions in many jurisdictions, they are obligatory. Employers have to contribute on behalf of their employees, while these employees also do contribute to their pensions. Now, let us just go through straight away into an example so that whatever we do would be supported with some minimum body of knowledge. Okay. All right. Okay. Now, an employee is paid at the. We want to understand. Okay. In this particular example, we want to understand what gross pay is. Okay, we want to understand what gross pay is and what are the computations involved. All right, so an employee is paid at the rate of $10 an hour. Tax and other deductions amount to 25% for weekly income in excess of $120. Okay, so whatever you earn above 120 is going to be taxed at 25%. Employer payroll taxes is equal to 10% of gross wages. Okay, gross wages or gross pay. All right. If an employee works 46 hours in a week, what are the employee's gross pay? Okay, net pay, and the total amounts that have to be paid by the employer to the tax authorities. So let us first calculate the gross wage. Okay, gross wage. We are told this guy is being paid at $10 per hour, but he worked 46 hours. So 46 multiplied by $10 per hour. Hey. $10 per hour. Okay. $10 per hour, so which means this guy earned 460 in this particular week. Okay, now if he earned $460, all right, how much tax should be deducted from him? Okay, so for the tax now, tax liability, tax payable should be $460 multiplied by 120. Okay, 460 minus $120, because we are saying that this is a minimum non-taxable amount. If he earns less 120 and less, then he's not going to be taxed. But if he earns anything above 120, he's going to pay tax to the tax authorities. So 460 minus 120 in bracket multiplied by 25%. This gives us how much? Using our calculator. Remember, you just have to love using your calculator, because by the end of the day, if you don't use your calculator, you are going to fail. So 460, sorry, 460 divided by, sorry, no need to divide, don't divide anything. 460 minus 120, we get 340 multiplied by 25%, that's 85%. So the employee himself has to pay $85 to the tax authority. So the gross pay, we calculated it. Okay, now the net pay for this guy, net pay is gross wage or gross pay minus the tax and other deductions. So which is equal to 460 minus 85, and we get how much? 460 minus 85, so this guy is going to take home $375. That's his net pay. That's the pay packet amount. Now we also had, so this one we have obtained it, then the total amount that have to be paid to the employer, that have to be paid by the employer to the tax authorities. This one is the amount which the employer has to pay to the tax authority. Okay, we are told the employer pays only 10% of the gross wage. So amount the employer pays, employer tax amount is equal to 10% of gross wages or gross pay, 10% of gross pay, which is equal to $46. Because gross pay was $460 as we have calculated here. So 10% of this amount is $46. But sometimes the examiner would say how much in total is going to be paid to the tax authority, not only by the employer but including the employee. So if it includes the employee's called tax liability, as you will discover at the end of this lecture, you will discover that the tax authority is going to receive both the employee's tax liability of 85 and the employer's contribution or tax liability of $46. Are we together? And the total will be the total amount of tax that has been submitted to ZIMRA or to whatever tax authority in your jurisdiction. All right, let's move. So labor costs in general, labor costs can arise from the basic wage or salary of employees, their overtime, bonuses, commissions, where the sales are, where the employee is entitled to so much percentage on each sale he makes. Okay, and the sick pay, holiday pay, payroll taxes. All right. Many countries, including Zimbabwe, pay wages and salaries under a pay-as-you-earn scheme, which means that the employer deducts the employee's income tax from the gross wage and pays that over directly to the tax authority. And as aforementioned, only the net amount after tax is then paid to the employee. Please take heed of this. Now, there are various methods which we can use to determine the gross pay. Various methods. Number one, a constant weekly or monthly amount. This is easy to calculate. For example, labor cost is equal to remuneration per period multiplied by number of periods. Okay. For example, a guy, an employee is said to be paid for, $20 a week. So in 7 weeks, you would be entitled to 140 as his gross wage. Now, what about a situation where we have an amount based, okay? Sometimes we have an amount based on hours worked. That is the basic plus overtime. For example, 52 hours are worked in a week. Basic week is 40 hours. The basic rate of pay is equal to $10. And overtime is paid at a time and 1/2. Okay? Time and 1/2. Basic pay would be hours worked multiplied by basic rate, and the basic rate is $10. So if this guy works 52 hours, then he's entitled to a basic pay of $520 plus the overtime, and the overtime, like we said, 1.5. Okay, 1.5. What simply mean is, a time and a half. What it simply mean is this half is the overtime. Okay, and the complete, this one is the time, the actual time, the basic hour. Okay, but the half is what is called the overtime. Okay, so in this case, the employee works 52 hours, but a normal week, the normal time should be 40 hours. Okay, the normal time should be 40 hours. So the extra was 12 hours. Okay, 12 hours multiplied by $10 per hour multiplied by the overtime rate. Okay, the overtime rate is half. Okay, so the overtime rate is half. All right, the overtime rate is half. So what it means is the other time of this extra there was 12-hour extra, okay, was included here when we compute as 52. Okay, is part of this 52. All right, so the time part is the basic. Okay, the overtime component is the half, as I've already explained. Okay, so let's say you are paid your normal week or your normal hour is 2 hours in a day. 2 hours, that's your normal hour, but you worked 3 hours, and overtime is paid at a time and a half. What it means is you're going to be paid basic for the 3 hours at basic rate, at normal rate, but you're also going to be paid, the overtime will be 3 minus 2 hours, which is equal to 1 multiplied by the 50%, 0.5. This is what is happening here, and you are going to be given your money. And what will differ now is this extra. Okay, your benefit will be you're not going to get the full amount, the full 100%, but only the 50% on those extra hours you made. Okay, you're not going to benefit the full amount for this extra 1 hour you worked, okay, but just a 50%. This is where students are going to be confused, but I'm sure you're not going to be confused anymore. We're saying here, this guy, his normal week is 40 hours, but he worked 52 hours, okay? So there was an extra of 12 hours. For those 12 hours, he's going to be paid a basic rate for the 12 hours, okay? They're going to be paid this, and they are in this 52, okay? They're this 52 you are seeing here. But those 12 hours again are also going to be paid an extra 50%, okay? Which means instead of getting $10, he's going to get $5 mathematically, okay, as part of the overtime. So the 12 hours here, 52 minus 42, that's 12, multiplied by $10 per hour, multiplied by 50%, because overtime is going to be paid at a time and a half. And there is need to ensure that you are comfortable, because they are treated differently when it comes to classification of costs. Do not bunch this the basic component as part of the overtime premium. The overtime premium is the 50%, okay? The 50%, which is multiplied by $10, multiplied by the total time, that is in this case 12 hours, and we get 60. So you add up and you get a total of 580. All right, let's move on. That's what is called the piecework rate, okay? I mean the piecework method of remuneration, where an amount is based on units produced. Often there is a guaranteed minimum amount of pay so as to comply with minimum wage rates, okay? We may agree that an employee is going to be paid this much for every unit which he produced, but there are also labor laws which are going to make us forced to pay this particular employee even if they decided not to reach a certain amount. For example, in a week, in this particular jurisdiction, in a week, an employee is entitled to $250, but the piece rate is $3 per unit, which means if the employee is very fast and wants to work, is so motivated, he can work so many units, he can produce so many units, okay? So if 100 units are made in a week, then the pay will be $300. But if only 80 units are made, this guy should be paid 240. But because of the labor laws, we are going to pay him 250, which is the minimum wage per week in that particular jurisdiction. If we pay him 240, he's going to sue us, and we are going to be penalized. That's the piecework system, okay? Now, remuneration methods continued. We're going to have this fourth method, where the amount is based on productivity, okay? There are many different types of bonus scheme, and any question would have to set out what is actually being required by the examiners, okay? But in this case, we're having this particular information where the basic pay is equal to 9 hours per hour for a 40 hour week, okay? 40-hour week, and we are paid $9 per hour. All right, normal production in that time is got 120 units. Bonus got 50% of the time served on production paid at time and a third. What will be the total wage in a week in which 150 units are made in 40 hours? Okay, In this illustration, our case is taken a step further, where we'll be also required to show some mathematical precision. Okay, our mathematical IQ is being tested, and we should show the examiners that we are not down, we are ready to pass to go to the next level. All right. We are told that the basic pay is equal to $9 per hour for a 40-hour week. So the basic pay is very easy to compute. Okay, we can say basic pay. Yeah, that's $9 multiplied by 40. So basically the basic pay is equal to $360. Okay, but there is some issue here, and that issue has to be addressed. What will be the total wage in a week in which 150 units are made in 40 hours? Normal production in that time is equal to 120 units. So normal production is 120 units, and we know that normal production is also 40 hours. Okay, so 120 units for this normal production are produced in 40 hours. But now in this particular week, 150 units were produced. Okay, 150 units were produced. So what happens is sorry, units were produced in 40 hours. Okay, but was this supposed to be the case? What was supposed to be the case is that 150 units were supposed to have been produced in how many hours? We're supposed to have been produced in 150 over 120 multiplied by 40 hours, which gives us 50 hours. This was supposed to be according to the budget, because our initial budget, 120 units are produced in 40 hours, because that's the normal week. But instead, we produced 150 units in 40 hours. Which means the gain but the 150 units were supposed to have been made in 50 hours. So there was a saving of how many hours? 150 units were supposed to have been made in 50 hours, as we have computed here. Okay, because it's very simple. 120 units need 40 hours. What about 150 units? 150 units would need 150 over 120 multiplied by 40 hours, and 50 hours are needed. But instead of requiring 50 hours, or instead of using 50 hours, we used only 40 hours. So there was a saving of how much? Saving was 50 minus 40, because instead of taking 50 hours, we took only 40 hours. So we saved 10 hours multiplied by how much? Because we have to know the amount of this saving. We have to know the amount of the saving. Okay, the saving, because the saving is gives us the entitlement. The saving was 10 hours. Okay, saving was 10 hours. Okay, let me just write here. The saving is equal to 10 hours. Okay, so the bonus is based on this saving. So 10 hours. So the bonus would be 10 hours multiplied by $9 per hour. Okay, $9 per hour. All right, 10 hours multiplied by $9 per hour. Okay, multiplied by 50%, because we're told bonus is equal to 50% of the time saved. Okay, so $10 multiplied by $9 per hour, which is the basic pay, multiplied by 50%. Okay, because the bonus is paid at 50% of these 10 hours, multiplied by the bonus rate, which is time and a third. So 1 and a third. Okay, so if we use a calculator to punch these figures, 1 and a third is the same as 1 multiplied by 3 plus 1, that is 4/3. Okay, 4/3. For those who have got problem with their calculators, so we might start with 4/3. Okay, you get a figure there. All right, multiply by 50% is 0.5, multiply by 9, multiply by 10, that's 60. So the bonus is 60 here. So if we add 360 plus 60, we get 420. All right, this will be the total wage in a week in which 150 units are made. It's 420. Just think of it. Just this type of questions, they always come in the exam, and we must show the examiners that we are now mature. We can work out things, however complicated. All right, let's move. Now, there is what is called an initial amount plus a bonus. Okay, here for example, the bonus could be part of a profit share. Full instructions would have to be supplied on how you are going to go about with the computation. Okay, let's go through this particular example and just take a minute to read the example yourself. Okay, employees are paid $7 an hour for a standard 40-hour week. Overtime is paid at time and 1/2. The employee is expected to make at least 120 units in a week, and to encourage productivity, each unit in excess of 120 will generate an additional payment of $5 less an overtime premium that would relate to the time the additional unit would normally take. What is an employee's wages in a week in which 135 units are made and the employee works 44 hours? Okay, let us determine the amount of units which could be made in an hour. Okay, just units, I mean the amount of time which could be made to produce 1 unit. Okay, that is time per unit. Okay, time per unit is given by 40 hours divided by 100 units. That's the standard time. Okay, 100 units. Right, so this gives us a third. Okay, that's a third. Okay, because 40 into 41, 40 into 120, that's 3. Okay, now let us compute the mathematics. The basic pay basic pay, we're told that these guys are paid $7 per hour, and they've worked how many hours? They've worked 44 hours. So that's 7 multiplied by 44, and we get 7 multiplied by 44. That's a dollar sign there. That's okay. 7 by 44. That's 308. Okay. That's 308 per week. Okay. And this particular week, their pay was 7 multiplied by 44. $7 per hour multiplied by 44 hours. That's 308. Okay. And then we have to include the premium, the overtime premium. Overtime. How much was the overtime, and how do we get there? We are told that a normal week is 40 hours. Okay. But in this particular week, they worked for 44 hours, so there was an extra of 4 hours. Okay. Multiplied by, we are told that the overtime is being done at a time and a half. A time and a half. So the overtime component, we are going to give this guy 4 hours multiplied by half multiplied by $7 per hour. And that's 4 multiplied by half, that's 2 multiplied by 7, that's 14. Okay. And then what do we have to consider here are the extra units, the amount of units which are extra units produced. How do we know these extra units? Normally the week 40-hour week produces 120, but this particular week in 44 hours which we worked, we produced 135. So the extra was 135 minus 120, that's 15. So 15 multiplied by we generate an additional payment of $5 less in overtime, so $5. The extra units give us 15 multiplied by 5, that's 75. Okay, less any extra overtime. Okay, overtime premium, the extra. All right, the extra, how do we get extra? Less an overtime premium. Okay, so the extra overtime, this one is paid at a time and a half. Okay, so that's we can start with the half, doesn't matter. Okay, the half multiplied by $7 per hour. It's okay, multiplied by the extra hours. We only know the extra hours. The extra hours are not simply because you would come back to this one. This one we've already done it. Okay, but the extra hours in this case are going to be found in the number of units produced. Okay, because the number of units is the actual amount that is going to guide us. So the number of units were 15 units multiplied by how many hours per unit? This one, we calculated it here per unit. Okay, and we're going to slot this figure here, the 1/3. Okay, and we use our calculator. That's 0.5 multiplied by 7 multiplied by 15 multiplied by a third, that's 1/3. That's 17.5. So remember, we are saying less. Okay, so that's 17.5 is in brackets. This is the amount where the wages. Okay, the wages, the total wage. Okay, so if we use our calculator, that's 308 plus 14 plus 75 minus 17.5. We're going to pay this guy 379.50. That's how we have to calculate and compute these figures. All right, let's go to the next. Okay, Tekla is a salaried worker. Okay, a salaried worker. Tekla is a salaried worker who also receives overtime of $10 per hour. Okay, she receives overtime of $10 per hour for hours worked over 156 a month, and a productivity bonus of 5% of her basic monthly salary if the quality of her work exceeds expectations. Her salary was $12,000 per year, payable in equal monthly installments. This has been increased to $15,000 by agreement on 1 May, backdated to 1 January. In May, she worked 175 hours and produced work of better quality than standard, which means she's entitled to the quality component of this bonus. Okay, what will she receive as gross pay in May? Okay, so let us start by computing the basic salary. Basic salary in dollars. Okay, the basic salary is we are told it has been increased and backdated to January. So over the 12 months in this particular year, they are now being given 15,000 divided by 12 per month. 15,000 divided by 12 to get the salary per month, and that is going to take us to 1,250 if you use our calculator. Then we need to determine the overtime. We'll discuss about why do we have to separate overtime from basic pay and so forth. We'll talk about that. Okay, what about the overtime? We are told that this guy, okay, Tekla is a salaried worker who also receives overtime of $10 per hour for hours worked over 156. So if she works for hours over 156, she is entitled to overtime. Okay, basically by working extra hours, she's entitled to a bonus of $10 per hour. Okay, and we are told that she worked 175 from 156. So this difference, 175 minus 156, multiplied by $10, because she receives $10 per hour for any extra, for anything above 156. So 175 minus 156 is how much? 175 minus 156. I use my calculator because I can't afford to lose a mark because of inaccuracy. So 19 multiplied by 10, that's $190. Now the quality bonus, because she's also entitled, if she produces good work, she's entitled to a particular bonus, quality bonus. Okay, the quality bonus is based on 5%. Okay, 5% of her basic monthly salary if the quality is good. So 5% of 1,250. This is the 1,250 we are talking about. Okay, so 5% of that figure is how much? 1,250 multiplied by 5%. That's $62.50. So that's the amount. Let us add it up. Oh, that's 50. Okay, that's 2, that's a 5. Okay, that's not a 5 here. Okay, that's 15, that's 5, that's a 0. Okay, that's a 0 and 3, that's 5 and a 1. Okay, So 1,502. Okay, but we're also told that this guy, I mean, in this particular May, that's when the increment occurred, and it was backdated to January. So there are 4 months of pay we have to receive. Okay, so the back pay, we have to add the back pay from 1 January to 3rd April. We can't include the May because the May we've already factored it here. Okay, so the back pay is how much? That's 15,000. 15,000 minus, they used to get 12,000 here, so minus 12,000 divided by, I mean multiplied by 4 months, 4/12. Okay, that's 4/12. Don't just say 4, because if you just say 4, hey, you produce a very big figure and you distort everything. All right, this 15,000 or 12,000 was an annual figure, so this is why we are dividing by 12. But if it was a monthly figure, then we were only supposed to multiply by 4. But these ones are annual figures, so they have to be adjusted by 12 months. All right, so that's 3,000. 15,000 minus 12,000, that's 3,000 multiplied by 4/12. So that's okay, made a mistake. 3,000 multiplied by 4/12. That's a 1,000. Okay, so in total this guy is going to get 2,000 in May, but doesn't mean that every month is going to get that amount, only in May. Okay, because in May there was a back pay. Okay, so that's 2,500. Sorry, my pen can't write properly. So the amount becomes 2,502.50. That's the amount we are going to get. These guys are now disturbing. All right, so okay, so I hope you have determined, I mean, you're now home and dry with these computations. This is how we obtained this this TECLA, see gross pay in May. Okay, and like I said, the May figure is larger because it included these amounts, okay, which are for previous months, which have been backdated in May. They are back pays. All right, so typical exam questions would come this way. Now let's talk about the payroll administration and documentation. There are usually these 3 documents in the payroll area: the timesheets, attendance records, and other personal documentations, which include the cards to record the person's career progress. In the military, they call it the record of service, sometimes other things. All right, but these ones are the major ones, which are of interest to financial and as well as management accountants. The timesheets, which record the hours spent by each employee on each job or doing the work of each client. Then the attendance records are used by the personnel department to determine the reasons for absence from work and to administer the granting of leave. All right, so that's part of the documentation, and usually the examiners ask about the uses of this, so you just have to read a lot about these documents. Okay, payroll ledger accounts. labor costs can be accounted for using a salaries and wages control account. This account helps to ensure that the entries are being made correctly. So we have to be used to these journal entries whenever we talk about the wages and salaries account. All right. Now, when we recognize the expense, when we simply recognize the expense, we have to debit the wages and salaries account, because remember our PO's acronym. If you still remember the PO's acronym, where we said that if you slash midway, okay, this is the debit, this is the credit. Okay, we said that purchases, expenses, assets are increased by debiting, whereas the revenue, liabilities, share capital, etc., they are increased by crediting. Now, wages and salaries are expenses, so whenever we are recognizing an expense, we are going to debit it. This is why at the end of the month we have to debit wages and salaries account with gross wages, but credit the wages control account with gross wages. Okay, we then have to debit the wages and salaries account with additional employers costs and credit wages control account with additional employer costs. Now, when we pay, okay, we then have to debit the wages control account with the net wages and credit the cash with net wages. We debit wages control account with employee deductions and then credit cash with employee deductions. Lastly, when payment of other amounts are made to the government, we debit the wages control account with other amounts due and credit cash with other amounts due. Okay, by crediting cash, do not be confused here. By crediting cash, it means that because cash is an asset, but when we are crediting it, it means that we are reducing cash. Cash is getting out of us, is getting from the business, is getting out of the business. Okay, so that is why we are crediting cash as we are making payments. Okay, we are crediting cash. There is a pro forma you have to get used to. Okay, the wages control account. All right, this is a ledger account. By the end of the day, we have to debit the wages control account with the cash actually paid to the employees, okay, and credit this one with the expenses recognized. This is the cash that was paid, okay, the income tax to the authorities, these ones, the net wages which were given to the employees, the pension fund liabilities. Okay, remember, both the employee and the employer all contribute for their pensions, for their benefit contributions, and so forth. Okay, they contribute as well as the other deductions. Now, the trick about this side, okay, the contributions, the benefit contributions or the pension contributions, they are the employers which come this side, employers. But on the debt side is both the employer and the employee. Okay, just whatever contribution you saw, you may just work out the balancing of this account by knowing that this side only the employer's details come, and then the gross wages. Are we together? Okay, let us just do the example that follows. Show the following transactions in wages control account and the wages and salaries account. On 31 March, gross wages calculated as follows. That is 45,000. Those were the gross wages. Okay, gross. Then deductions for employee taxes were 8,000. Okay, 8,000. Deduction for employee pensions 3,000. Then 31 March again, employers' payroll tax calculated as 4,000. 31 March, employers' pension contributions 5,000. Okay. 1 April, employees paid amounts due. Okay. 1 April, employee paid amounts due. And then 15 April, tax authorities paid amount due. So all these amounts which were due were paid on this particular date. And then on 20 April, pensions fund paid amounts due. Okay, so we are told that those expenses which we had recognized were paid on these particular dates. Now the question is saying that we want you to show these entries in our wages control account and the wages and salaries account. Okay, because by the end of the day, as accountants, we have to communicate through our records, through our books. So let us start with the wages control account. And remember that template. Remember this template is very useful. That's the wages control account. Like I said, this side goes the gross wages and the employer's contributions, be they for the benefit contributions as well as for pensions obligations, contributions. So wages control account, wages control. It is a T account, okay, with a debit and a credit. All right, so you may just say the date was just 31 March, okay, 31 March, right? And wages and salaries gross. All right, and we are told that the gross were how much? 45,000. These were the gross, so that's 45,000. You mustn't be confused with this. 45,000. Then on 31 March again, the taxes, okay, the payroll taxes, but we only take payroll taxes. Employers, like I said, this side is for the employers tax obligations. How much were they? Employers payroll tax calculated is 4,000. Then on 31 March again, we did something here about the employers pension contributions. 31 March, pension contributions. These are just for employers. Let me just put in bracket employers, payroll employers. So the employer paid how much? What was his obligation? The employer for the pension contribution was 5,000. Okay, like I said, you can just do this side. In an exam, you'll be very under pressure. So if you just work out this side, you're highly likely to pass. Okay, so let us just add up. Get 0 0 0. Okay, 14. Okay, 1 4 5. So 54,000. But let us just do this side. We know that the first entry should be let's say 1 April. The first entry should be the net pay to employees. Okay, let us determine the net pay to employees. How do we get that? We know that their basic was 45,000. I mean the gross was 45,000. Okay, and then we have to deduct their deductions. We go to the question: how much was deducted from the employees? 80,000 was deducted. But what else? The pension contribution was 3,000. Okay, let us just start with the taxes. Okay, all right. Like I said, let us start with the taxes. All right, it's 45,000 less 8,000 less the taxes. All right, these ones for the employers, because I said that this side will include both the employer and the employee. Okay, both the employer and the employee, but this side is just gross and the employer. This side is net pay and then both the employer and employees. So let's start with the tax deductions. Okay, that's 8,000. Okay, minus 4,000. So how much are we left with? This is 12,000 minus 45,000 minus 12,000, and it's mean that we'll be having something like 33. Okay, that's 33,000. 45 minus 12. Right? Yeah, that's 33,000. Just. Okay. I think here we slightly made a mistake. Okay. All right. Let's just do it systematically. Okay. Let's start with because the net pay equals gross pay less employee deductions. So these are the deductions on the part of the employee. Okay, these are the deductions. Their employment tax as well as their pension contributions. So then it's just have to say 3,000 here. Okay, so we get 34,000. Let me try to use the eraser. Okay. Okay, so that's 3,000. So we get 34,000. All right, and then on the which date did we make the payment? On 15th and 20th. On 15th April, we made the payment to the tax authorities. So which payments we made? This one. Okay, we made this payment as well as this payment. Okay, so the payments which were made should also appear on this side. So on the 15th of April, we made payment to tax authorities. Payment to tax authority. Okay, how much were they? 8,000 plus 4,000. That's 12,000. Okay, And then on the 20th of April, we made payment to contributions, to pensions, and the figures were how much? The figures, we paid 3,000 as well as 5,000. Okay, remember this side is for both the employer and the employee, so 3,000 plus 5,000, so we get total of 8,000. So we have to totalize both sides. Okay, and in the exam you just have to check yourself, because they should balance either side. Okay, they should balance. So the credit side is 54 and this one is 54. This one is how much? That's 20 plus 34. Boom, we balance. We are balanced. Okay, so the account is balanced. We have done the right thing. Now let's now do the wages and salaries account. It's also a T account. Okay, it's also a T account. Okay, now this one is actually the mirror of the ledger account. Okay, it's the mirror of this ledger account. So it is increased by debiting. That's the expense account itself. Okay, so we are saying now that we have to debit it to increase it. Okay, so at 31 March we've got the gross pay. Okay, gross pay, which was 45,000. Then we have to include employers' commitments. Okay, so employer tax, or payroll tax, employer tax, payroll tax. Okay, which was how much? According to the question here, the employer was paying how much? The employer was paying 4,000. Okay, 4,000. The employer also paid pensions. Employer pension obligation, which was how much? According to the question, the employer paid how much? Contributed how much? The employer contributed 5,000. Okay, so if you add up, it should come again to 54,000. One thing you have to know is the wages and salaries are expenses. Okay, so this is to balance. We've balanced the expense account, but there is something that is missing here. Okay, so this one is balance CD or transfer to statement of profit or loss. Okay, to close up this, we have to transfer to the statement of profit or loss 54,000. These are the costs. 54,000. These are the costs incurred for this particular month. Okay, that's the wage bill. I think this one is our last example. Let me just check. Let me cross check. I think this one, yes, that's our last example, and I hope it is also going to assist us in understanding the whole subject matter, right, in understanding everything as a wind up. Okay, temper has the following payroll details in month 1. Write out the double entry for these transactions and show the wages control account at the end of all the transactions. Gross wages and salaries we've got for administrative staff, sales, marketing, production. Employers' benefit contributions, employees' contributions, income tax deductions, okay, pension deductions. Net wages and salaries, season ticket, loan repayment. And in the exam, you just have to be guided by the principle. Okay, just be guided by the principle. We now know that the wages control account has got only gross pay and employers' obligations on the credit side, and on the debit side we have got both. We've got the net pay plus the employer and employees obligations. So it's very simple. Okay, just have to stand on that principle even on exam day. It mustn't be swayed or diverted by anybody. Okay, so let's do it. Let's start with the double entry. The double entries. Well, the question say write out the double entry of these transactions. So let's start with the double entry. Okay. Okay, it's double entry, it's debit, credit. Just have to have to do a double entry en masse for all the transactions. Okay, so let us start with the gross pay. Gross pay. What happens to the gross pay? Okay, this double entry is like the last account which we did for the salaries and wages itself, the account itself. We have got the gross pay on the debit side, if you still remember. Okay, it's different from the control account. This is the wages and salaries account. Okay, so when we talk of accounting for the gross pay and so forth in this particular account, obviously the gross pay is going to appear on the debit side. But when you talk of the wages and salaries control account, okay, we then have to do the opposite. Okay, so the gross pay, we're going to take the gross pay for all the accounts, for all the administrative staff, sales, marketing, and production. Okay, just going to deal with them at once. So gross pay admin, gross pay marketing, and gross pay what else, production. Okay, with their respective amounts. The admin at 102,531, 102,531. These guys have had how much? 226,704, 226,704, and then the other one was 1 million and what? 1,067,895. Okay, if you add up, you just have to get the amount which you are going to put there as the wages control account. But when we start to pay now, that's when we are going to debit the wages control account. Right now we are still recognizing the expense itself. Okay, the wages expense, we are just recognizing the expenses. It's okay in that particular period. But when we pay now, that's when we will be closing this expense account and debiting the wages control account and credit in cash. It's very interesting, isn't it? That's good. Okay, so if we add up here, 102,531 plus 226,704 plus 1067,895, we're going to get 1,397,130. You can as well underline, it doesn't matter. Okay, you can as well underline, it doesn't matter. Then we had another double entry. If you go to the question, so these ones have been done. Okay, the employers benefit contributions. Okay, employers benefit contributions, just have to debit them. Okay, employers contributions, benefit contribution. Okay, all right. And how much did they contribute, these guys? We are told that the benefit contribution was 104,782. 104,782. And we are going to credit the wages control with the same amount, 104,782. Remember, the debit and the credit should always balance. Let's go back to the question. Employees benefit contributions. Employees benefit contributions. Okay. Now, like I said, okay, when we covered this one, when we did this question, we only record employer's tax, okay, I mean employer's transactions as part of the debit entries in the wages and salaries account. Similarly, this side, in the wages and salaries control account, this side we only record employer's transactions. Okay, why is it so, you may ask? Okay, the employees' contributions are not the costs to the company. Okay, if the employee salary is deducted to pay tax, to pay NASA contributions, that's not the cost to the company. Okay, this is why we are not recognizing those deductions as part of the wages and salary expense. Those are not the costs to the entity. Okay, so we ignore that and go and look for the transaction which the employer entered into, and I'm sure the employer paid pension contributions. So employers pension contributions, how much were these contributions? If you go to the question, employers pension contributions, they were 41,728. 41,728, and you also have to credit the wages control account with the same amount. Done. Now we then have to do the rest with regards to the other transactions which occurred. Okay. Wages control this time is the one that is being debited. Okay. Okay. After we recognize the expenses, the wages and salaries expense, we now have to pay them. Okay. And now when we are paying, like I said, when we are paying, we are going to debit the wages control account and crediting the I mean the cash, if we're paying, if the cash is coming out, and also those particular individual accounts where we are taking out the payments from. For example, if it is the tax liability or the tax payable, we are going to credit it. Okay. And we are debiting the wages control account. Okay, so we are going to start with but remember, we'll be now including both the employer and the employee. Okay, it's the same thing which we've been doing. All right, and let's go to the question. Let's go to the question. Okay, now let's start with the deductions. Okay, let's start with the deductions. All right, the payment or the amount payable with regards to pension deductions, they go from both the employer and the employee. Okay, so these amounts, they are payable. Okay, they are both payable, so they have to be considered here in the wages control account. So we have to add them up. How much are they? That is 41,000 728 plus 37,860. That's 79,588. And here we just, like I said, this is the payment for pensions, contributions, I mean pension fund payable. Okay, it's just a payable to the pension fund. This is to go in that. Another payment that is to be made, we are going to debit. It should be the tax payable. Okay, the tax payable. All right, the income tax payable. The income tax payable. So the tax payable, this one, 351,826, 351,826. Okay, and tax payable, 351,826. Then lastly, we have to talk of the benefit contributions. There was something discussed about the benefit contributions in the question. Okay, benefit contributions for both the employer, this one, and the employee, this one. So these ones we have to consider them. Okay, that's 104,782 plus 83829. That's 188,611. So this one has to be benefits contributions for both the employer and the employee. 188,611. Okay, now after we consider everything here, okay, we can also see that there is another item that is missing. Okay, that is the net pay. Okay, this is the net pay. Okay, all right, this is the net pay element, but still we're going to debit the wages control. We just do the same. Okay, just do the same. Wages control is being debited. Wages control with our in brackets, let us just say wages control net pay. Okay, because we are told in the question the net pay was how much? The net pay 903,893. $903,893. So, but this is a payment from the bank, so the bank is going to be credited 903,893. Okay, then there's one item there from the question, the salary tickets. We're also going to do the wages control with the salary ticket. I mean the season's ticket loans. These are just employee benefits. Okay, season ticket loan repayments. Okay, the loan repayments. Okay, $19,722. Okay, season's tickets. Okay, we've done with the double entries, and we now have to, but you can see that from this information the wages control account can now be easily computed or presented. Okay, so the wages control account can be now safely prepared. Like I said, it's also a T account. And we now know that this side goes the gross pay, okay, gross pay or gross wages, and we now know this figure, okay, this figure we now know it, okay. All right, so the figure is this one. We are talking about the gross pay, okay. That's the gross pay. We have already found it, okay. So just have to slot it in the wages control account. So that's 1,397,130. 1,397,130. Okay, that's our gross wages, okay. And then we know that all the transactions that are going to follow are the employer's transactions. So employer's tax obligation, employer's tax obligation. How much would the tax obligations? Okay, when it comes to the employer, all right, there are no employer taxes here, okay, but these ones tax deductions, these ones are for the employee, okay. So you just have to ignore that. But employers contributions, employers benefit contributions are there. Also employers pension contributions, they are there. So let us just find their values. The contributions, the benefit contributions, how much were they? The benefit contributions were these ones are the employers, okay. These ones 104,782, 104,782. And we've got for the pensions, that's 41,728. 41,728. Okay, so if we add them up, we get some figure. 1,397,130 plus 104,782 plus 41,728. So we've got 1.5 43,640. 1.543,640 million. Okay, we can as well balance this side with 1,543,640. If this side, if the debit side becomes larger, we'll do we have to find out where the difference is emanating from, okay. And we know this side as well. We know that this side has got the net pay, okay, net pay, okay, the net pay, which was about 900, if you still remember, the net pay is this one. Okay, the net pay, it was 903,893. So 903,893. Okay, then we've got the tax. Okay, and in this case there were only employee deductions, and we have to factor them here. Those taxes 351. Okay, this tax payable 351 826 351 826. We have to factor in the benefit contributions, and we calculated them as 188 something here. The 188, the benefit contributions 188, these ones 188,611. Yes, this one was 188,611. Okay, and then also have to know, to factor in the pensions payable, and we also calculated this figure. It was around $79, 79,000. All these figures. Okay, 79,588. 79,588. Then the season ticket loans, what then you have to factor them, and this was the value. $19,722. If we add them up, both sides, they should come to 1,543,640. Then we know that our wages control account has balanced. Okay, if you can also have a look, you can see that the last part of the double entry was actually in preparation of the wages control account. Okay, what was happening here, you can see that we were almost doing the wages control account, but in an opposite way. Okay, what is appearing on the debits here, or what is being debited in the wages control account, is being credited. Okay, and what is being credited in the wages control account is being debited. Okay, as you can see, but it's almost an issue to do with okay, I also touched on things to do with why there is need. I also talked about the need for classification of costs, that is between basic pay and overtime pay. Okay, if you still remember, in our initial studies, where we talked about the issue to do with cost classification. Okay, because by the end of the day, the information which we produce should be useful to managers. Okay, so if you just bunch up costs, it is very impossible for us to know who to blame. Okay, sometimes it is the production manager who is to be blamed, sometimes it is somebody else. Okay, or we need to come up with a good strategy to motivate our employees. So we need to know where the labor costs are emanating from and how are they being absorbed. Okay, so indirect, I mean overtime, the overtime is an indirect expense. Okay, it's an indirect cost to the business. So this is why we have to separate between the basic pay component as well as the overtime premium component. Okay, so the overtime premium itself, the premium component, is an indirect cost to the business, whereas the basic pay is part of the direct labor costs. All right, but when a customer is specifically requested us to go an extra mile such that we spill over into the overtime period, then that cost is not going to be an indirect cost, but it becomes part of the direct labor cost. It becomes part of the direct labor. So this is why you need to be very careful. And okay, but if the expense is just been incurred without the insistence of the customer, then it becomes an indirect expense. The overtime premium component becomes an indirect cost, which should be costed in that regard. Okay, I hope you have been helped with this video, and if you still have got more questions, do not hesitate to contact me. I'll always be there to assist you. Okay, I'll always be there to assist you. Thank you so much. Until we meet again, may the good Lord bless you and make you bountiful and prosperous. Thank you. We want you to do the assignments. Okay, just do these assignments. They are very helpful as part of the revision. So do those assignments. You have to replay the video over and over again so that you get assisted. All right, this is why you hire us. We have to make sure that you pass whatever module you are studying with us. Just have to become certified in the quickest possible, shortest time. Okay, so enjoy your studies. Thank you.